All right, let's get right into it because what happened today, well, it was one of those days that changes the game. We just saw a truly historic surge across Asian markets, a kind of perfect storm where tech, policy, and pure momentum all hit at the exact same time.
So let's set the scene. It is Monday, February 9th, 2026. The markets have just closed here in Asia. And what we all just witnessed, this wasn't just a good day. This was a fundamental shift, a major repricing of an entire economic region. And right at the center of it all, South Korea's Kospi index. It just skyrocketed, up an unbelievable 4.10% in a single day. That's more than 208 points. I mean, seriously, that's the kind of gain you hope to see in a whole quarter, not in just a few hours.
So yeah, today the market didn't just set new records. It felt like it completely rewrote the rulebook. In this explainer, we're going to break down exactly what happened, dig into the deeper forces driving this thing, and, most importantly, show you what our data models are saying is coming next, and lay out a clear strategy for how to navigate it.
I mean, just look at these numbers. The KSPI closed just a hair under 5,300. But this wasn't just a story about Korea. The energy was absolutely contagious. We saw markets in Hong Kong and Shanghai get a major lift too. This was a coordinated blast-off across the entire region. So the big question, right? What on earth powered this? How did this even happen? Well, it wasn't just one thing. It was really a fusion of two massively powerful engines that decided to fire up at the exact same moment. Let's break them down.
On one hand, you've got the tech engine. We're in the middle of an AI supercycle. Global demand for high-bandwidth memory, the stuff that powers AI, is just insatiable, and Korean companies pretty much own that market. Then, on the other hand, you have the policy engine. Korea's Value Up program is cleaning up corporate governance and, wow, is it attracting a flood of foreign money. The two together, a perfect storm.
But here's the thing. These two engines didn't just come out of nowhere. To really grasp the scale of what we saw today, you gotta zoom out and look at the bigger picture. Our analysis keeps pointing back to 5 core economic theories that honestly almost predicted this exact moment.
First up, Gunther Dueck's intelligent economy. The idea is actually pretty straightforward. When an economy stops being just about labor and starts being about knowledge and intelligence, growth can become exponential. That is Korea right now. It's not just making things anymore. It's literally building the brains for the global AI revolution, and the market is finally waking up to that.
Next, let's talk about low time preference, a concept from Saifuddin Ammous. It sounds complicated, but it's not. It's just the idea that real wealth is built by sacrificing a little today to invest in the complex tools you'll need for tomorrow. Think about it. All those billions that Korean companies poured into semiconductor R&D for the past decade, that was them playing the long game, and today, boy, is it paying off.
Today was also a perfect illustration of Ken Fisher's idea that bull markets have to climb a wall of worry. I mean, just a few weeks ago, everybody was terrified about potential U.S. tariffs. But today, the earnings growth was just so explosive that it completely overwhelmed those fears. The market didn't just climb the wall of worry, it took a wrecking ball to it.
This brings us to socionomics, which kind of flips everything we think we know on its head. The theory is that we have it backwards. A rising stock market doesn't make people optimistic. No, an optimistic society is what makes the stock market rise. And the proof is right there in Korea. Consumer confidence is at a multi-year high, and that term value up is everywhere. That positive mood set the stage for today's explosion.
And finally, cycle synchronization. You know how sometimes everything just lines up perfectly? That's the idea here. Big things happen when different independent cycles all hit their peak at the same time. Right now, in February 2026, we're seeing the 4-year semiconductor cycle peaking, a government policy cycle in full force, and a 10-year tech innovation wave all cresting together. Today wasn't a fluke, it was almost inevitable.
Okay, so that's the why. We've looked at the immediate catalysts and the deep theories behind them. Now let's get to the question every single investor is asking right now: what happens next? Let's take a look at what the quantitative models are telling us for the rest of February.
So our models, which pull in all the macro data and volatility metrics, are signaling that this strength is likely to continue. For the KSPI, the projection is a target of 5,680. That's another 7.2% of upside from where we are right now. And we're seeing similar continued momentum for the KOS stack and for the big indices in China and Hong Kong too.
And to really visualize this for the Korean market, this chart puts it into perspective. We're here, after this massive run-up to almost 5,300, but the data is suggesting the move is not over. That projected path to 5680 implies that the underlying trend is still incredibly powerful. The energy from today is expected to keep pushing us forward.
So, with this analysis and these projections in our back pocket, how do you actually position yourself? A market that's moving this fast requires a really clear discipline playbook. We've built out a three-part quant strategy based on today's data.
We're calling it the AI Value-Up Fusion Strategy. First is momentum. You stick with the big drivers, like the major semiconductor firms, and treat any small dips as buying opportunities. Second, paired trading. This is where you buy the undervalued companies that are jumping on the value-up train while hedging by betting against the overvalued ones that aren't. And third, and this is absolutely critical, hedge your risk.
Look, no strategy is ever complete if you're not managing your downside, and there are still very real threats out there. The possibility of a 25% U.S. tariff is probably the biggest known risk. The Korean won could get volatile. That's why the third part of our strategy involves keeping a part of your portfolio in dollar-based assets or even gold to protect against those specific outcomes.
So what's the one big idea you should take away from today? It's this. That psychological line in the sand, KOSPI 5300, it's been shattered. It's not a ceiling we have to worry about breaking through anymore. It's the new floor that the market can build on.
And all of this leaves us with the ultimate question. Was today's historic rally just a spectacular but temporary bit of good news? Or are we standing at the very beginning of a new economic era for Asia, one powered by the twin jets of AI and reform? Only time will tell for sure. But today, the market cast a very, very powerful vote.